Good evening, everybody. Now into solid fall weather. Cold and rainy here in Pittsburgh. Had a light coating of snow this morning. So before we start tonight, I want to do a little survey because I've had a couple of people ask whether they could do we could do a private training session, which is the full 2-day training like we did here at the I used to do up at Cuca Lake. We've done here the last couple of years at one of the hotels right near us here in Pittsburgh. But somebody suggested we might want to do a 2-day full training on Zoom where we wouldn't be restricted as far as conversation, that we could do the training. People wouldn't have to worry about the travel, wouldn't have to worry about the hotel expense, that we could spend 2 full days right at our desks, and everybody everybody would be able to converse like we would on a live training. So, is there anybody that would be interested in that type of live training? All right. Maybe. Okay. That's answer a definite indecision. Yeah, we didn't have any problem with social distancing last time. Nobody seemed to have been worse for wear. It would be the same cost of the full training, which is $4,900. But remember, with that, you don't have to worry about your travel expense. You don't have to worry about hotel, and you still get all the same benefits. That you get a 1 year free to the website, and everything that you want off the trainings are free after that. Well, we might be able to reduce the cost a little bit. You still get the jokes. Yes. Maybe we should increase the cost of the jokes. So anyways, we'll put out some of the promo on it and see if there's enough interest to do a Zoom training. You mean like last weekend training would be? Well, Tom, we could do that. That's usually pretty much the case. Okay. Well, we'll see if we can get something set up either for December, maybe. Usually January is pretty good after the holidays. So we might try one. Okay, so what we can see going on in the Dow was it didn't trade around too much today, but it did a doji just above the T-line, which makes it fairly easy to see what our direction would be tomorrow. If they open things positive tomorrow after the doji, that would be additional confirmation that a J-hook pattern is in progress. Obviously, because of the doji rule, if we see things opening lower tomorrow, that we don't have a J-hook, maybe we have a starting a slow drift to the downside. But what was more compelling over the last few days of trading was the fact that the NASDAQ did kind of a bullish flutter kicker signal above the T-line, making that more, making it more indicative that a J-hook pattern. And then notice what it did today. They brought the NASDAQ right down to the T-line and bounced it back up. That's additional confirmation that maybe this pattern is going to be setting up. Now, you don't necessarily need to scan for J-hooks. J-hooks are going to start coming up automatically based upon these type of signals right here. Let's take a gander at some of the other commodities. Crude oil's gone relatively flat, going sideways. Gold, still very slow uptrend, but in the overbought area. Hanging man, but you're still above the 3T line. The grains were a little bit soggy today. Well, maybe not as much on the wheat as it was the corn. Corn was bobbling around today. I'm trying to think of the dollar, still in a nice fry pan bottom uptrend. Okay, so I was going to try to find which sectors are acting the strongest, but right now there's so many sectors in uptrends, it's hard to see which ones are the strongest. So I'm going to flip back to maybe identifying high probability entry strategies. And this is very simple. If we see a pattern and it opens positive, confirming the pattern, we pretty much want to see bullish confirmation. The fact that when they opened and immediately started trading lower, obviously the candlestick chart would show a red candle. Well, what's our trading strategy? They opened positive in a pattern, took it down. If they turned it around and brought it back up through the open, that's when you want to be buying. That would tell you it's confirming the pattern and the initial profit taking is over. However, if they never bring it back up, obviously that keeps you out of a bad trade. Kind of the same scenario here on APLS. We recommended this one on positive trading today, but same thing. As soon as it opened, it traded lower. Now, where would we be buying this one? If it comes back up through today's open, that would tell us that this pattern is still working. This was just a bad hair day. Zip, same scenario. There's your bullish flutter kicker signal. Make this a little bit smaller. But it opened and immediately started trading lower. These are all clear entry strategy deconfirmation, if that's a word. Telling you, even though it opened positive, there was no bullish trading after it opened. That keeps you out of bad trades. And OW, kind of the same scenario, but on the short side. However, this is why we want to use our signals and patterns to our advantage. Notice it did a doji today. Still in a downtrend. Below the 50, below the T-line. But very simple. It's probably going to move in the direction of how they open after a doji. So if this opens lower, then you could be shorting it because Now you've got a dumpling top with a bearish doji sandwich telling you they're failed at the 50. Even though you're in the oversold area, just like a bullish pattern, like a fry pan bottom usually breaks out when you're in the overbought condition. Same scenario on a dumpling top. They usually break down when you're in the oversold condition. So this is why we want to recognize what the strongest signals and patterns are. Your best friend signal. And once again, I was illustrating, let's see, I did a meta-stock presentation today, and in the YouTube, the question would be, should you be buying here, or would you be chasing it if you were buying here, or buying here? And that's where, using the same analysis or same information built into candlestick signals, is they gapped it up. You could still be buying, you could still be buying, you could still be buying, maybe not buying here, but buying here because it tells you the bulls are still there. May not be buying here, but might be buying here. And then you can see what happened for the rest of the day. This was Friday. They pretty much held it up. The best friend signal is a doji gap up. The reason we call it your best friend is because it tells you out of an indecisive trading day, they've told you which way they want to take it. Now, a doji followed by bullish confirmation is good. A doji followed by a gap up is even better. I'm trying to trade, but I have a job. I just noticed that you said there's a D confirmation. How can I address something like that if I'm placing buy stop orders along with stops the night before? How do you keep from buying something that opens positive and starts heading down? Sarah, that's the conundrum. That's the risk reward. Unfortunately, the more time anybody spends in front of the computer, the better probabilities they have of being in the trade at the right time. There's nothing you can do. Forget what this opened right at 10 and immediately traded off. There's nothing you can do about that. I don't know how sophisticated a lot of the brokerage firms are to say, if I am buying this at 10 and it executes, I want to put a stop at the previous day's open, because it shouldn't be heading back in that direction. So does anybody have an answer for Sarah of how you can? Yeah, but can you add a stop loss even before your trade is executed? All right. A bracket order, all right. All right, Sarah, you might look into that. An order, send order, all right. So I don't have the answer to that, Sarah. Other people have put in the answers, only because I've never had to worry about that situation, because I sit here and watch every trade, or I'm sitting here anyways. All right, so now let's see. So the best friend signal provides high probabilities of being in the right trade at the right time. And the reason it's called a best friend is because not only will it be a high probability of the direction, but it will also be a high probability of the magnitude of the direction that will be extremely strong. So there's some things, I'll go right to this, there's some things you have no control over. I was buying a half a position of calls on neg because of the J-hook pattern. And then sure enough, after hours, they came out and said they were going to do a new offering of 300 million shares of $300 million dollars worth of stock. So it's trading back here. So the problem with the risk reward of all this is there is no way to guarantee what's going to happen. All you're doing is putting your trades on where the probabilities of what it should be doing is occurring. You can't ever tell when somebody's going to come out with a new offering or somebody after hours downgrade the stock. But the advantage we do have is finding the stocks or sectors that are breaking out of patterns that have high probability expected results, like we saw in Blink. You can see the fry pan bottom breakout, and then you can see how the T-line acted as a support level. It closed up here. Now after hours, I think it's trading right down here, but as long as we're above the T-line, you have to assume the uptrend is still in progress. Sarah, all right, we'll have to study that to see that if your trade executes and it immediately goes the opposite direction, how to stop out at a level. So the electric vehicle sector was acting very well today. You can see QuantumScape traded up nicely, but now it's trading lower. But you can still assume that as long as we're trading up above the T-line, you can stay long. Fisker, same scenario. And then Lucid did announce earnings. And the last I saw, they were still trading up about a dollar or more to the upside. Had gotten all the way up to 48 at one time. But still, I think it's trading up at 45.50 and higher, which means the uptrend remains in progress. Lucid was the named car of the year. Yeah, it's all that. Fuel cell, still in an uptrend. Now, the reason I point this out is there's selling in these uptrends. There's nothing that's, I mean, not every trade goes straight up. But the qualifying factor is as long as it's trading above the T-line, you have to assume the uptrend is in progress. There's nothing you can do about the ins and outs of a daily movement. But as long as we know the T-line is the support factor, that allows us to sit through the zigzags. You can see this was kind of testy up here, but what's the underlying factor on LWLG? It never could close back below the T-line. BEKE. Whoops, let's get rid of that. Same scenario. Your best friend signal, then a gap up, profit taking. Now it looks like it's heading higher. If this is a choppy J-hook pattern, what can we assume? That if this is wave 1, wave 3 should take us up here at least to test the highs. So we can make assumptions based upon the pattern we're looking at and what everybody else might be looking at as a target area. Rover, observe the obvious. They could never close below the T-line. On Friday, they used the T-line as a support level and the 50 fry pan bottom. What's our assumption? They're not selling this off. It was a profit-taking day. Now what's our assumption? If they open this positive doing a doji sandwich, we got a J-hook pattern in progress. We're going to try to do a day trading session here pretty soon. But these are the elements of trend or signal confirmation that we can use to our advantage. That if we can see a pattern setting up and we can see a potential trade setup, that if this opens positive tomorrow and does a doji sandwich, we know that tomorrow's trading should be the same magnitude as this trading right here. So it allows us to, with much more confidence, that even if you're a day trader, you're getting into something that you know is going to have a high probability of moving in a specific direction. The kicker signals are still working well. MIME, ever since the kicker signal off the T-line. SHU, ever since the kicker signal off the T-line. Now it looks like it's setting up for a doji or J-hook pattern. Trade desk, kicker signal, still activated. CYXT, there's a kicker signal. So what do we have based upon this kicker signal? Wave 1, wave 2, J-hook pattern starting with wave 3. What would be a good bullish confirmation? A positive open tomorrow, confirming your kicker signal. Chris, are you asking what kicker signal? Kicker signal is where they open it here, close it here, a dark candle. The next day they gap it up at or above the previous day's open and go the opposite direction. They've kicked the investor sentiment in the opposite direction. GAN, this is a bearish kicker signal. Opens here, closes here, green candle. Friday they gapped it down below the previous day's open and went this way. What's that telling us? There's a lot of force to the downside. Is Boeing a kicker signal? No. What color does this candle need to be? Remember, there's a difference between a kicker signal and a best friend signal. This is kind of a spinning top gap up, J-hook pattern. Freeport. A kicker signal, yes. Now, a true kicker signal does not have the tail to the downside. You want to see it open and trade positive. However, if they have a little bit of a tail down here and then go positive, that's still giving you the same illustration. They gapped it up. Remember, the gap is already built into the signal. It closed here, it opens up here, it gaps up, and then goes the opposite direction. And apps, there's your bearish best friend, your doji gap down. How long do you stay short on this? Until you see a buy signal and a close above the T-line, or if you start moving too far away from the T-line in the oversold area, you get a little bit more ready for looking for a reversal signal. When do you close out short positions? When the probabilities start going against you. So we're getting down here toward the oversold area. Look at your evening star signal with a hanging man, a bearish double doji, and where did they close on Friday? Right smack dab on the 50-day moving average. Now that tells you something. That tells you obviously the 50-day moving average was likely going to act as a support level. So what does that do to our decision about being short on a day like today? Well, if they start trading positive, especially up through the open of the previous day, coming off the 50-day moving average that could possibly be a support level, you have to assume that's where the bull stepped in. You cover your short position. CALX. Oops, I got that in the wrong place. Maybe that wasn't the right one. But here's another case where do you set your stop? Just below the T-line. Because if you start seeing indecisiveness and a close below the T-line, the probability factor is you want to be out of this trade. The probabilities have gone against you. PLTR. That's the one I was looking for. Bearish kicker signal, gap down. Now you're down here toward the oversold area. You're seeing a bullish doji harami, seeing kind of a spinning top hammer signal. And then they opened and traded positive today. What's that telling you about this area? Well, they're not selling it off, so you would have closed out your short position with the expectation now that at least your first target is probably back up to test the T-line. But this illustration right here, if you were short, there's buying going on down here toward the oversold area. Get ready to start closing out your short position. And the reason you always put safety stops in place is if you put your stop right there, logic says after a long-legged doji in the overbought area, if they come back down through this level, you want to be out of that trade. And Twitter, kind of the same scenario. When it broke this level, that told us we should be in wave 3. However, on Friday, look what happened. It did a bullish harami doji. Remember, anytime you see a harami in a signal, anytime you see a doji in a signal, that's a little bit more potent as far as a potential reversal. Where would you have set your stop if you were short? Logic says if there's enough strength in the oversold area after a doji to come up through the previous high of the doji, close out the position. The green line is the 3T line. It starts working more effectively the further away you get from the T line. Well, this one would have been a toughie to stay in. You shouldn't have been long, because when it came back down through here, it needed to open positive and trade positive. When it couldn't get back up through the T-line on Thursday, that told you you should be out of this trade. What did you need to see? You needed to see a buy signal confirmed. Obviously, you wouldn't have been in this trade. Now, as far as going short, apparently this was earnings. Now you've got a bearish kicker signal, which means there's probably going to be some more downside. Yes, SP. How did you miss our comments? If you were short, and then you saw the bullish Harami down here in the Harami Doji in the oversold area, where would you have set your stop? At the previous day's, the Doji high. Because the logic says if you're in the oversold area and they can come back up through the high of the Doji, you should be out of the position. All right, thank you, Nancy. Okay, as far as the biggies, telling you which way the market's going. Not anything real conclusive here on Apple. Pretty much a sideways chart. Amazon, kind of the same scenario, no real direction. Nvidia, having a hard time going anywhere. So here's your perfect example that if you're in a fry pan bottom, you can stay long until you see a sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability they're going to come back and test it. So once you started seeing this selling, that gap up in the overbought area should have told you to start watching for sell signals. I would have probably closed this one out if I was long at the end of the day, and then waited to see what it did back here at the T-line. So one can have a BL Harami, as in, I don't know what a BL Harami is. A bullish Harami, as in Twitter, with a red candle. Yes. Whoops. What is your, oh, with this being a red candle, that's still, what is that signal, Gail? What does the color of this wee little teeny body have to do with anything? It's the doji that we're looking at. And doji is going to be a day where you can see that the open and the close are very, very close together. So it doesn't matter whether it's red candle or a little green candle. The fact that you had a trading range and it opened and closed right at the same level should have told you, get ready, or worst case scenario, yes, the body of a doji, which is going to be very small, doesn't matter what color it is. It's still showing you indecision between the bulls and the bears. Why couldn't it be a bearish Harami? Because where does a bearish Harami occur? Suze, wait for your individual ones after I tell Jim to do the double line. Where does a bearish Harami occur? There you go. Okay, Netflix. You can see the pattern of J-hook, and here's another day trade setup. But if this opens positive tomorrow, what do you got going? A doji sandwich with the likely magnitude of this. What's it tell you about this level? Tells you it's probably not going to act as resistance. It confirms your new uptrend. All right, things like this. This is where the doji rule comes into play. Kind of a little fry pan bottom. You broke out through the 50. You broke out through all this trading range, and you gapped up and did a doji. So now what's our trading rule? The price is usually going to move in the direction of how they open after a doji. What's that regarding, Ray? Oh, okay, bearish Harami, yes. You want to, your bearish Harami is at the top of a trend. Your bullish Harami is at the bottom of a trend. Suze, what instrument is that? What instrument is what? So if this opens positive tomorrow, what do you got going on? Kind of a fry pan bottom breakout. A doji sandwich says there's going to be more upside. So we were explaining to somebody today that Ford is one of the few long-term holds. Now it's trying to do a J-hook pattern. Would I be buying Ford here? I would probably be buying Ford here. Would I be buying Ford here? Probably not. But after you see this pattern supporting at the T-line, that tells you it's rejuvenated. Look for the next move to the upside. We did neg. DCRC, there's your J-hook pattern. Look at your slow curve, and then look what happened right here at the T-line. Kind of your best friend, not quite a best friend, Morningstar type signal, gap up, broke this downtrend, and there's still a lot more buying going on. INVX, nope, and VZ. There's your bobble breakout. Another high probability trade setup. Why? Because you got a J-hook pattern. What's more compelling about this J-hook pattern? Everybody and their brother watching what it's going to do with the 50 sees that it's broken out through the 50. Now they have confidence they can be buying, because think of how many people are told that you don't want to buy something unless it's above the 50. Where the 50 doesn't mean a hill of beans as far as what we're looking for. We're looking for the signals. The 50 is just a moving average. But the people that are all watching to see what they've been told that you don't buy unless it's above the 50, now see it's above the 50, that's when they start buying. We would be buying based upon the pattern that was setting up. DBRG, another J-hook pattern, continuing this uptrend. DBI, a J-hook pattern, bobble breakout. Did I do the last one right? DBRG, yes. DBI, a bobble breakout. What type of pattern do we have on this bobble breakout? A classic pattern. There's your fry pan bottom. There's your J-hook, which in this case is more accentuated because it's a bobble breakout. But institutions rarely buy $6 stocks. Bob, what does that have to do with anything? Is that an answer to a question, or? Yeah, we're not worried about what the institutions are doing. We're more concerned about what the overall market is doing. All right. Did I do Indy? Yeah, there's your bullish flutter kicker J-hook pattern. The prior stock broke above the 50-day moving average. What, DBI? DBRG. This is what you were referring to. All right, I don't know what we're now trying to clarify. Oh. So was this saying that institutions don't buy $6 stocks? But what does that have to do with this trade movement? Somebody's buying this stock doesn't necessarily mean it has to be an institution. Do bobble breakouts usually retest the 50? No. No, that is the breakout. Yeah, so yeah, we're not worried about institutional buying and selling. We're only worried about things that have institutional buying and selling. Like things like 3M, that's an institutional trader. But as you can see, that's a very, very slow moving stock. So yeah, we're not, yeah. Institutions have nothing to do with who is buying and selling. G-Pro. There's kind of your J-hook pattern that broke through. So look what it's confirming. There's kind of your fry pan bottom, bigger fry pan bottom. There's that little trend kicker signal. So remember, those trend kicker signals are what give you a clean or quick insight. Notice our little trend kicker signal right here. Notice it opened here, closed here. Let's make this bigger. And then the next day they gapped it up. We were buying immediately because if they're gapping up, if you're in a pattern and they're gapping up above the previous day's open in a trend, that means it's going higher. Now, can we project that it would go like this? Definitely not. We were just anticipating that it was going higher. Now I forgot which one I did. Did we do G-Pro? Yeah, the trend kicker signal. LAZR, there's your bobble breakout, fry pan bottom. Wouldn't be afraid to be buying this one on positive trading tomorrow. Again, look at all the pieces of evidence you have in here that this is a good place to be buying. First of all, the bobble breakout. Secondly, the fry pan bottom. Third, the classic pattern. Fry pan bottom, J-hook pattern. And the J-hook pattern more defined by the bobble breakout. Another kind of classic pattern breakout. Another one that I wouldn't be afraid to be buying on positive trading tomorrow. Now that it's kind of broken through this level with a little slow curve. Bruce, you're always going to have to mention the name of the stock when you ask the question. That's not just for you, but everybody. Because you can't figure out which one you're referring to. Yeah, that is your message on Lazar. They gap it up and sell it off. Now the selling has stopped and started back up. But the most important piece of information on this chart telling you they're taking it back up is look where they brought it back to. Right here to the T line and then bounced it back up. That's where we made good profits on this one when it came that far away from the T line, took profits and didn't pay attention to it after that. Until it came right down here on the T line, bounced back up and opened positive. What was that telling us? The T line was acting as a natural support, that this pattern was still in progress. Pins, this is what we call a stutter step. What is this signal right here? Anybody? No signal, exactly right. So what can we assume by a no signal? That the uptrend is probably not going to be very compelling. Well, sure enough, they pull it back. And then what's this signal right here? Bullish Harami. That is a signal. Then you've got a bullish Harami that gaps up, confirming their signal. So we call this a stutter step. They take it up, not compelling, pull back, kind of a stutter step. Now that's when you start buying on the next signal. So you had that one. And that was the same reason we pushed MGI. You had a good strong signal. It didn't confirm, but then there was your stutter step starting back up again. Now the stutter step is just kind of a comprehensive view of what's happening down here. You're starting to see buying, doesn't confirm, then the buying does confirm. So even if we didn't get in here, now we can be buying here because you add all this together, the bulls have taken control. HLBZ. What do you got going on here? I can get all these lines off of here. There's your fry pan bottom. Things picking up. High probability trade if it opens positive. We did DRCR. VVNT. Anytime you can see this little breakout, kind of a bobble breakout, Morningstar signal, gap up through the resistance level, that's telling you pretty much that they've come in with great force after they broke through the 50. Where do you think the next target will be? Right there. I want to see what it does once it gets to that level. Yalla. Add this one up. Fry pan bottom breakout. Didn't confirm. Then a bullish Harami. Where did the bullish Harami form? Bounced right off the T line. And then what did it do today? There's your trend kicker signal. Fry pan bottom breakout. Who do you think's winning the battle on this one? The bulls. Definitely will be a buyer of this one if it opens positive tomorrow. So anytime we see a breakout situation, it's telling you there's been a change of investor sentiment. It could be earnings. It could be some sort of contract announcement. If I see something moving big, the first thing I do is go to the news and see if there's anything on the news. If it's an upgrade, probably going to pay less attention to it. If it's good, strong earnings, better than expected earnings, I'll continue or be more inclined to buy it. Strong earnings, more inclined to be buying it. expecting more upside. Does a positive have to be above the, no. Positive is just a positive open. Which one were we looking at? Yawa? No. Didn't the bears take control, closing the candle more than halfway down? No. No, your stochastics are in an uptrend. You're coming out of a pattern. Remember, just because it's a formation doesn't necessarily mean it's a signal. So, Chad, it doesn't have to go above the previous day's high. All it has to do is trade open positive and start trading positives. Because what was this today? In an uptrend, moved up nicely. That's profit taking. But what's your overall assessment of this pattern? You're in a fry pan bottom breakout situation. So anyways, if I see something breaking out, I'll go and see what the news was to see if it's going to continue that breakout move. Oh, here was the I put this in the wrong place. This is kind of your belt hold type signal. So I'm going to do a study, or if somebody would like to do the study, that when they gap it down and then start bringing it back up, doing kind of a belt hold. Now, a belt hold typically is 1 day coming back up into the trading range. In this case, it was 2 days. But notice the pattern that's setting up off of this one. Kind of your J-hook pattern. Bob, what would the implication be? Who is it a very strong bullish move if it opens lower tomorrow? Obviously not. Why would we be buying this pattern with the expectation that the bulls are in control? If they open it down here, what's it telling you? The bulls really aren't in control just yet. Now, if it opened down here and hovered and then started coming back up through this level, yeah, then I'd get ready to buy, because what color candle would that be forming? Another green candle with the expectation that this uptrend is in progress. A little belt hold signal. Now, what do we want to see? Again, like on any trade signal, we want to see it trade positive. Notice you had a big belt hold over here. What did they do the next day? They didn't open positive. So this weekend we did the T-line training, but part of the statistics in that T-line training was that we know that probably 30% of our trades aren't going to work. Not because there's anything wrong with candlestick analysis or our analysis. It's just probably 1/3 of the trades aren't going to work. When you know that, that way you don't have to be like I used to, take it personally. When I put on a trade and it didn't work, I'm thinking, did I do something wrong? Am I stupid? What's going on here? But once I realized that about 1/3 of the trades aren't going to work, you just tell yourself, all right, that trade didn't work, let's move on to something else. Now I forgot what I was, So if we know what we should be expecting after a candlestick signal, like positive trading, what we're trying to do is keep ourselves out of bad trades. So Would I be buying this one on a lower open? No, I want to see it trade positive. What that essentially does is, instead of our having 70% good trades and 30% aren't going to work, if I can eliminate the ones that aren't working or don't have the prospects of working, if I can move my bad trade percentage from 30% down to 29.2, even though that doesn't sound significantly great, over the long run, instead of being in 70% of good trades, now you're in 70 point whatever 8 trades that are better. We're trying to keep that correct trade ratio as strong as possible, because the compounding effect of being in correct trades is a heck of a lot better than trying to buy at the absolute bottom and selling at the absolute top. So that is a little belt hold on this one, yes. A big wick on top is usually bearish if you're up in the overbought area, like that. But a big wick in the oversold area could be an inverted hammer. So a down open would nullify the rosy outlook of Yalla, yes. If I'm ready to buy tomorrow, I want to see it open positive and start trading positive, because that's what the pattern tells us. If it opens lower and starts trading lower, what's it telling us about the strength of this pattern? It's not there, move on to something else. At least until it goes higher than the previous. No, just positive trading. Remember what this was today. That was profit taking. If this opens positive and starts trading positive tomorrow, what's it telling us? The profit taking's over. The pattern is now continuing to work. This was the other one. There's your belt hold type signal. There's your result, kind of a scoop type J-hook. So I often profess that to become astute at trading, instead of trying to learn all of them at the same time, pick out 4 or 5 and learn them very well. Now I know this works, but I don't know to what degree, because I haven't gone back and studied it very well. So that's why we might want to do a statistical study to see every time we see a belt hold confirming, what's the probabilities of it moving higher. Okay, smokes, how do I get overtime like this all the time? ONDS. There's your doji sandwich, fry pan bottom breakout. Where would you think your next likely target's going to be? Coming up and testing that level. All right, and there are stocks to go short. There's your bearish best friend on Bloom Energy. What's this tell us? Doji gap down through the T-line. A lot of force to the downside. Oh, will SP? Yeah, unfortunately, there's not enough belt holds that occur in 1 week. You might have to, I don't know how you would go back and search it other than just going back through charts and seeing where belt holds occur. It may take a few months, yes. And then the other one somebody pointed out is Splunk. There's your bearish kicker signal. That's a lot of force to the downside. Okay, so with the market still in an indecisive stage, it'll be important to see how the pre-market futures are showing us that it's going to open tomorrow. We definitely need to see things open positive, telling us the J-hook pattern's in progress on the Dow. We certainly want to see positive trading here on the NASDAQ, also confirming a J-hook pattern. What we don't want to see, if you're bullish, is it opening and start trading back down below the T-line tomorrow. Peter, if anybody can come up with a bunch or a statistical study of the belt hold type signals, I'll give them a free set of flashcards, both sets. CrowdStrike, thank you for showing that one. That's another bearish best friend signal. They're going to be a little bit different. The Qs are going to be about the same as the NASDAQ, because that is what the Qs are. They're the futures of the NASDAQ. Same scenario on the Dow. Right now, the futures of the Dow, the YMs, are showing that the market is going to be up. Let's make this bigger. Up 49 so far for the Dow tomorrow. But remember, the futures right now do not mean a hill of beans. You could short, yes. Now, remember, you could short on lower opens on both of those. With the implication they're going to be heading down. But you probably wouldn't want to do, yeah, John, that's the same thing I was telling the chat room today, that 90% of all statistics are made up, but I had to say I made that up. Only bearish best friends found tonight on my scans are lit and I'm surprised at lit. Yeah, it did. Lithium. But why did this not show up on your scan? Why do they say a hill of beans? Because I don't think a hill of beans is worth very much. Oh, let's see. Oh, somebody was Roblox. Again, another day trade setup. But if this opened positive tomorrow, what would we expect? Another day like this, which would give you a McMuffin, which would confirm your J-hook pattern. Okay. Shoot, Jay, I think I would have just bought a bigger jack. All right, are there any general questions on candlesticks? All right. So when you have them downgrade, remember, It might not be long lasting, but it's probably got some residue selling. I would suspect they could probably be coming back to the 200. Suze, that's why we have the top ranked signals and patterns. We probably, let's see, did we do that session a while back? It'd probably be worth your while to get the member discount and buy the top ranked signals and pattern training. There's about 18 of them, with number 1 being the best friend signal. I think then the left-right combo, I forget 3, I think the kicker signal. So if you've got 20 good trade setups, how do you go through those 20 good trade setups and see which ones are the best? Well, that's where you go through your top rank. I probably would go after the ones that are best friend signals, bullish and bearish. Bob? Oh, let's see. Did Abe send me app? If you Abe was going to send me the link for the mouse pads. For flashcards, we've got 2 sets of flashcards. If you go to our products and services area, you'll see the flashcards. There's about 50 or 60 flashcards showing you the signals, and then on the back it describes the signal. We've got another set of cards that shows you the patterns. They show you the Japanese candlestick patterns as well as all the other patterns that are out there, like the head and shoulders and just all the patterns. There's probably about 40 or 50 of those. So those are things that you can keep on your desk and kind of refresh your memory, or at least get a faster learning process of going through the cards and seeing which ones are the or what the patterns look like or the signals look like. Does TC 2000 give scans for your signals? Yes. I'm pretty sure they've got their formulas over there. Oh, Walter, I didn't mean to ignore you. What was your question? When is it too late to get into a stock? When it's already started to move. So a lot of people ask, can I buy the stock right here? Well, what's your risk-reward factor? You're up in the overbought area. It may go higher, but when you're asking a question about whether I should be buying here, your true analysis should be, where should I have been buying? What were the signals that told me to start getting into that trade? Thank you, Suze. Tom, thank you also. Ray, the video should have said that if you're close to the, let's find one, if you're close to the T line, try to find something that would, if you're close to the T line, you probably want to see if the see a signal that closes up above the T line, give you the extra confirmation. If you're a good distance away from the T line, I don't know if this is the right illustration, but let's say these were a buy signal down here of some sort, and you were that far away from the T line. Well, if I can calculate that it was going to be a 12% move to get back up to the T line, yes, I would be buying. And then I'd watch to see what happens at the T line. But if you're trading close to the T line, like this, I would wait for it to close above the T line. It just gives you that little bit better confirmation. I ignored you. Oh, would you go short if Qs go below the T line tomorrow? No, not necessarily go short. Just because something is selling off doesn't necessarily mean it's time to short. If it closed below the T line, we don't know whether it's going to go sideways. Now, if it gapped down and started trading lower, yes, that would be telling me they're trying to come out with great enthusiasm. So it didn't ignore you, Walter. I just sometimes my speed reading just Ray, did you not go to the T line training this weekend? We were showing where you buy at the T line, below the T line, above the T line. It's all where the pattern is setting up. When you switch to a 10-minute chart and the candles are closing just below the T line, is it time to close the trade? I would. Let's pick out one. So if I was long and it was coming up and I saw it rolling over, yeah, I'd probably take profits. But then as it started coming back up, I might get back in because what was it telling me? They weren't selling it off. They were coming back up. Now, getting near the end of the day, well, that's today. So if this looked like this was Friday. If I got out here and then got back in here and then saw it weaving up and down, what's that tell me? They aren't going anywhere. And what's my daily chart going to look like? It's up near the top end of the range. Now, if I'm trading something like this, hopefully I can find this here. If I'm long, this was corn the other day, that when it got up here in the overbought area, I actually closed it out here because I could see on the 10-minute chart that we were starting, let's see if I can find this again, that we were starting to see sell signals with a tweezer top. Didn't close below the T-line just yet. But if I flip to my 5-minute chart, I could see that it was starting to come off and heading down. Yeah, so I took profits there. Thoughts on oil stocks? Oil stocks. Whoops, I'm on the 5-minute chart. You can see where they started closing below the T-line. It was time to come out of them. Right now, I probably wouldn't be long or short oil stocks. They're just not going anywhere. And crude oil, the December contract, just going sideways, just kind of hovering around $81. Can you explain about candlesticks that require confirming candlestick? Yes. Most of your signals require confirmation. Now I'm going to try to figure out one. What's Well, so this one, this is your doji sandwich, requires bullish confirmation. Trying to find a morning star or a bullish signal. I'll find one as we go through, Bob. But most of your signals require bullish confirmation, and that bullish confirmation could either be positive trading after the signal, number one, or number two, that it's closing above the T line, or the combination of both. You have a bullish signal that is closing above the T line, or a bullish signal that opens positive the next day and trading above the T line will be confirmation. We'll find some as we go along. All right. Any other general questions on candlesticks? All right, I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Airbnb. This one you could buy if it opens positive. You'd have your doji sandwich, J-hook pattern, classic pattern. Look at your fry pan bottom. So here's an example. Look at your left-right combo. Usually a very strong signal. Right at the T-line. I'd wait for confirmation being that close to the T-line. I'll illustrate some of these questions as we go along. RGS. Another nice looking chart. You can see the fry pan bottom. You can see not only did they break out through the 50 on Friday, but look where they used what they used as support today, right back to the 50, which tells me that if this opens positive, what do you got going on? There's your doji sandwich fry pan bottom breakout, telling you the 50's not acting as resistance anymore. VIPs, same scenario. Look at your doji sandwich, kind of best friend gap up through the 50. You stay long on this one. CF, just stay long. There's another bullish engulfing signal close above the T-line. When it opened positive the next day, what was it doing? It was confirming the bullish engulfing signal and confirming the fact that the T-line was not acting as resistance. Roku, nothing. It's in the basing area. If I was short, I probably would have covered the short today, and right now I wouldn't be long or short. Not until you see something that tells you what they're going to do from here. Observe the obvious. Look where this J-hook type pattern started. Right smack dab off the 50. Once it started closing up above the T-line, I told you your uptrend is in progress. Now we're looking to see if they'll break out through this level. Target is supposed to be reporting on Wednesday, but there's your scoop type J-hook pattern. I'd still be a buyer of this one on positive trading tomorrow. Clove, bah humbug. Well, what was that? Clove, nothing. If I was short, I would have covered the short. I wouldn't be long or short right now. CCXI started back up a little bit, but I still wouldn't buy this until they can get through kind of this level right here. And Westwater, nothing of great consequence here either. You can see your stochastics have gone sideways. You're hovering right here on the T-line. I probably wouldn't pay attention to this one until it comes back up through that level. Facebook, you could be buying this one on positive trading. Laser, you could be buying this one on positive trading. And then you're watching to see if it can get up through that level. Disney had earnings. Where is it trading right now? Let's take a gander. Apparently if they had earnings, they're not moving anywhere. They're still trading right here. I would stay short. IPW, another fry pan bottom. You could buy this one on positive trading. Just use the T or the 50 as your stop. Sprouts, there's your bobble breakout potential. Now, this is what we kind of illustrated in the T-line session this weekend, is they failed up here at the 200, and look where they pulled back to, right smack dab to the T-line. Again, a level that nobody has on their chart, so it wasn't like everybody was watching to see what it did at the T-line. Now, if it opens positive, what do you have? A bobble breakout, which is an extremely high probability trade. Frog, nothing of any great consequence here until it can break up through this level. If you're buying it tomorrow, you just want to see that it gets through that level. I'm going to go back to that one. Right now, all you can do on Chevron is stay long. On Prague, you have to kind of look at the trend. Trend's kind of sideways. So there's not a lot of enthusiasm in this one. What you're looking for is the enthusiasm. The buy signal, the gap up, that starts a trend. Right now, you're just sideways. I'd be someplace else until you see something that shows that there's a lot of strength or weakness coming into the stock price. Marvell, all you can do is stay long here as long as it stays above the T-line. I would put a sell stop back below the T-line, because if it opens lower and trades back below the T-line, you can see that it's starting to roll over. Myra, stay short. Here's a perfect example of where your safety stop should have been if you were long. Matador, nothing. Would not be long or short this one. CPE, that one you could stay long. You got your classic pattern setting up. Put your safety stop below the T-line. Herbalife, if you were short, you would have covered the short, but I wouldn't be going long right now. And Square, if you were short, you would have covered the short, but I wouldn't be going long until you see a strong close above the T-line. Snap, that's your best friend signal. This one I wouldn't be afraid to be buying on positive trading tomorrow. And PAGS, that's a good chart too. The gap up, you could be buying this one on strength and use the T-line as your stop. This one you start, if you were long and it gapped up, now we're looking to see if they open this positive and trade positive, a 45 degree. If I was long, I'd have my stop at today's open. It shouldn't come back in that direction. And eBay, nothing to get excited about here. Probably would not be long or short this one. DMNR, same scenario. There's nothing on that chart that would make me want to be long or short. Now there's your morning star signal. There's your bullish confirmation. Not only did it confirm the morning star signal, especially bouncing off the 50, but it told you when they gapped it up, they were confirming the signal and telling you the T-line was not going to act as resistance. This was not going to act as resistance. That tells you there's probably a lot more upside. Oxbridge bounced right off the T-line, came back, used the T-line as support. I'd be a buyer if it opens positive, telling you the 45 degree is still in progress. Yes, buy on positive trading. Las Vegas Sands. You can see there's really no trend to this. If you like it, you could be buying it. You just have to watch what happens at this level. Marna, nothing. Would not be long or short. Right now, no direction. Oh, Harry. FedEx, you stay long, you have your safety stop below the T-line. QuantumScape moved up nicely, but after hours it looked like it was trading back down in this range. But right now all we're doing with these electric vehicle stocks is staying long as they're above the T-line. Oh boy, does somebody have the link to the top rank? It's in the products and services area, Suj. Whoops. Riot. What is the halfway point? Right about there. So not quite a dark cloud. However, if this opens lower tomorrow, there's a pretty good prospect they're coming back to test the T-line. And Myra sold off hard. Probably that means Riot is probably going to start selling off also. Smith & Wesson, you can buy this if it breaks out positive tomorrow. Goog, nothing wildly exciting. If you're long, you just stay long. Costco, just stay long. Now this is more of an institutional trader. That's why it doesn't move real dynamically. But if you're long, you just stay with it. AUPH, yes, stay short. Dollar Tree. Look for a 45 degree to come off of here. The reason you're not gapping up in the overbought condition is because you're not in the overbought condition. That would signify more of a 45 degree. A trend kicker, not quite. It's still a gap up. It's not quite a trend kicker because that's not a big enough body to say that that was a major down candle. Netflix, you get ready to buy on positive trading, which would also give you a J-hook pattern. And Plug. No, not quite. Yeah, right there as an evening star potential. But your one factor that has been dominant in this whole uptrend is the fact that you haven't closed below the T-line. So you put your safety stop right here. It shouldn't come back down in that direction. ABCL. You've got some good bullish movement. Doji sandwich after kind of a little kicker type signal. You definitely need to watch to see what happens at the 50. So if you're buying on positive trading tomorrow, just watch the 50. Let's see, did we do this one, GGPI? Yeah, look for it to open positive. Under Armour, there's a J-hook pattern. Observe the obvious. Look where all the indecision was, right smack dab on the T-line. Well, it seems like the retailers were backing off. Well, so much for Dillard's and Macy's. Kohl's, yeah, they're all holding up well. Yeah, so I guess you could be looking at some of the major retailers. Yeti, a bullish harami, gap up, J-hook classic pattern right off the 50. You could be buying this one. Now, when I say you could be buying this one, you still need to see everything setting up correctly, meaning we don't want to see the pre-market futures showing us the Dow is going to open down 140 points. And we want to see that they're still trading positive, which makes this very simple. If they are positive and start trading positive, you can buy it, and you don't let it close back below the T-line. Thank you, Jim. A 45 degree is, trying to think of one, it was a while ago. I can't remember. A 45 degree is usually when you see, which ones were we seeing that was gapping up pretty big? 45 degree is when you see a strong breakout, and then it will kind of go into a 45 degree slow uptrend. I'm trying to think of one. X. This one might be classified as where they went pop, pop, and then went into a 45 degree. I don't think Blink was a 45 degree. Whoops. Blink is this fry pan bottom breakout. So how long do we stay long on this? Well, we moved pretty far away from the T-line, so it wouldn't be unusual to see a couple of days of consolidation allowing the T-line to catch up. Yeah, that would be considered a 45 degree when they popped out of here and then just kind of went into a 45 degree. Please repeat the 4 strategies for the open. Market is up, stock is up. Oh, FT, didn't you write it down? If the market opens positive and your stock opens positive, you probably want to be buying pretty quickly. If the market opens positive and your stock opens lower, you don't want to jump in until it probably comes back up through the previous day's open, creating another green candle. If the market opens lower and your stock opens higher, you probably don't want to jump in yet to see whether the lower market trading is going to stagnate or kind of modify your, that's not the right word, kind of mitigate your uptrend in the stock that opened positive after a buy signal. And if the market opens lower and your stock opens lower, you just don't do anything. Net, kind of a 45 degree. That wasn't a real strong move, but again, that's your 45 degree as long as it stays above the T-line. An AMD, all you can do right now is stay long as it stays above the T-line. Notice how it used the T-line as support today. Okay, so it'll be important to see how this market opens tomorrow. Right now, the pre-market futures are up 34, which doesn't mean anything this time of night. You definitely want to see it open positive and trade positive, giving you a doji sandwich, J-hook confirmation. All right, kept you way past bedtime. We'll see everybody bright and early tomorrow morning in the chat rooms. We'll see you then.